Nithya Balasubramanian joins us. Nithya, good morning. So nice to have you back. When I got an email saying that Nithya is joining us on the morning show, I was like, oh, no New Year holiday? How come she's so back early?
Thank you so much for having me, and a very happy New Year to all the viewers today.
Let's understand the big picture for the healthcare sector. There are two factors which are at play. One, which way the generic pricing would move, and second, what could be the impact of US election cycle on the pharma sector, especially the generic sector per se.
See, US generics pricing was softer last year. We had discussed about this earlier, and we do believe that this kind of softer pricing erosion environment is likely to last into this year as well. So we actually went back 10 years, we looked at data, and we looked at the correlation between interest rate environment and generic pricing. And what we actually see is a pretty tight correlation. So when interest rate tends to be high, generic pricing tends to be more attractive. Therefore, we believe this year as well, even accounting for the price cuts that are the rate cuts that are expected, we think interest rates will remain elevated, and therefore that will support a softer pricing environment. But the thing is, I think it's priced in. I think the market is already expecting this kind of environment to last into this calendar year as well. In terms of elections, in the US, pharma and the broader healthcare index tends to be a little volatile. We went back and checked the last 4 or 5 election cycles, and honestly, there's no pattern. But in general, a lot of rhetoric coming out of the candidates in the election tend to be a little negative for pharma. Drug pricing reforms, value chain reforms, all of them tend to get bipartisan support and usually is negative for pharma. Therefore, it's a little difficult to jump in with a lot of conviction this year. And therefore, stocks tend to remain a little subdued. So I think second half of the year is when we'll get a bit more clarity into what sort of reforms might go through. And that's probably when you start to position yourself in the sector when it comes to US generics.
Okay. How do you see the split of generic between oral and injectable and other categories moving this year?
Injectables, interestingly, we're seeing stronger prescription growth. We think the market is seeing a little bit of comeback. If you go back to COVID, a lot of elective procedures were delayed and pushed out. And we are now seeing some of those come back. There was a nursing staff shortage in the US as well. I think that's getting sorted out, which is why we are seeing a little bit of that growth come back into the numbers. So we do see names like Gland, for example, or Aurobindo or Dr. Reddy's who have higher exposure to injectables will possibly see base volume growth as well.
Okay. SIPLA was your top pick and SIPLA is your top pick. Have you changed your outlook any which way now that looks like the deal is not going through? Was that the deciding factor for you?
So last year, I think the deal was a little bit of an overhang, right? So will they, won't they, what sort of deal would be struck, at what price point would be struck? All these were questions in the minds of the investors. So therefore, the stock didn't move as much as some of their peers, right? So just like every other peer of theirs, SIPLA is also experiencing softer pricing and therefore much better numbers in the US. Again, gross margins have improved substantially. They, in fact, increased their margin guidance, but the stock didn't react as much. So we think in 3Q, when the margins remain sustained at elevated levels, we think the market will actually be ready to give them an expanded multiple. Some of their peers are obviously trading at a significant premium over where SIPLA is today. And beyond 3Q as well, we see multiple product catalysts. We're hoping some of the regulatory overhangs get resolved. The company had guided to their Goa plant being inspected sometime this quarter. That will hopefully, if it's positive, then generic Abraxane is a substantial opportunity that could come through for SIPLA. And they're also transferring their generic Advair file to the US. Again, hopefully that should come through in the remaining part of the year. And these two are material opportunities for SIPLA, which could provide the next leg for the stock.
Nithya, just a slightly big picture question. We are talking about consumption boom in hotel, hospitality, travel, real estate, premiumization. Hospitals are telling us that Indians, when they are visiting hospitals, they want better healthcare. How come we don't see that really getting captured in the Indian domestic pharma sector? I mean, there is no large explosion which we've seen when it comes to the domestic market per se. Am I missing on something, or this will happen?
See, I think we tend to look at data that's reported by either AAOCD or IQVIA. I'm not sure they represent the trade generic market particularly well. I think the panelist of distributors that they take the sample data from are more focused on branded generics. I do believe that there is a lot more volume growth than the numbers are reflecting in some of the smaller towns, your tier 4, tier 5 towns, where trade generics tend to be a larger contributor. So I do believe that there is a lot of scope and opportunity. You talk to any of the individual companies, right? You talk to the bigger companies, you talk to the smaller companies, all of them will tell you that they're actually seeing a fair amount of volume growth on the ground. And you can also see their commitment to the India market in terms of the reps that they've added on the ground. So most large companies have added anywhere between 1,000, 1,500 reps in the last couple of years. And a lot of them, as they improve in terms of productivity, you should start to see volume growth come through. See, I think at a top-down level, I do believe there is a lot more growth than what we're seeing in data. But I do believe that the growth drivers will possibly shift into volume growth from pricing growth. I think the last 2 years have been pretty good in terms of pricing growth because of the higher inflation as well, which was passed along. But now that WPI is trending much lower than before and back to pre-COVID levels, we should possibly see the growth driver shifting into volumes as well as new launches. And in new launches, I do want to highlight that this year we're hoping to see some of the GLP-1s, which are all the rage globally, to be launched in India. We already have Novo's already launched the semaglutide. We're hoping Lilly launches the tirzepatide as well.
I just wanted to get in your take in specific on Lupin, near a 7-year high, and still the outlook seems to be fairly bullish on this stock down the lines, in particular talking about the US pipeline that could be the key driver for growth. Do you see that playing out?
Multiple shots on goal. Spiri was obviously a very big launch for them, but that's in the numbers. It's expected to again scale up in terms of market shares next year. They do have the capacity to take more market share. Beyond that, they also have some first to file opportunities. Darunavir was one that played out this year. They have a couple of more in the pipeline. So I think the visibility into some of these material launches is what is driving the stock. But I think at a 30x FY25 PE, we are starting to get uncomfortable about the valuations.
In general, do you think pharma stocks are pharma as a sector is now priced to perfection? Whatever mean revision we had to see, we've seen in 2003.
It's not just mean revision. I think most companies, depending on what you're looking at, if you look at 10-year averages, most companies are now trading at almost one standard deviation above their own long-term 10-year average. But I think if you look at it from the perspective of premium to Nifty, I think that's still at long-term averages. So if you're willing to accord the India premium onto the healthcare sector as well, I think it's trading at a similar premium to Nifty. That being said, from here on, we think a lot is priced in. The softer pricing environment is priced in. We are expecting 9-10% growth at least from the India market. The higher gross margins are priced in. In terms of significant delta from these levels, at least sitting here today, I don't have visibility into any big catalyst. But that being said, we don't see major downsides either. So it's possible that multiples, therefore, are sustained. Earnings upgrades is what will drive the stock. So it then, therefore, becomes stock specific. So some product launches or specific licensing announcements, agreements, etc., is what can drive the stocks.
To have you on the show. Thanks as always for highlighting your views.